Good afternoon. South Africa's National Police Commissioner General Thami Ngubeni says transnational organised crime remains a major threat across the continent. Ngubeni was speaking at the opening of the 27th International Interpol Conference in Cape Town. Law enforcement agencies from around the world have gathered to discuss strategies that will help combat emerging security threats and organised crime around the globe. Ngubeni says drug and human trafficking as well as cybercrime are major threats.
Our duty as law enforcement leaders is not only to dismantle these criminal networks, but also to restore dignity and protection and hope to the people we serve. Esteemed delegates, Africa is a continent of immense potential of growth, innovation and resilience. Yet, these very strengths are targeted by those who profit from instability and exploitation. The only way to protect this promise is to build strong institutions, share intelligence, harmonize our legal frameworks, and strengthen trust amongst our nation.
South Africa's International Relations and Cooperation Minister, Ronald Lamola, says the country will continue to advocate for peace on the global stage. He says the conflicts on the African continent are a concern and hinder economic development amid the U.S. imposition of tariffs on numerous countries, including 30% tariffs on South Africa. Lamola was briefing the media in Pretoria. He says South Africa has established a team to assess conflicts in the region.
A delegation led by the Deputy Director General for Africa, Ambassador Tebogo Siokolo, recently visited Burkina Faso, Mali and Niger to gain first-hand insights into the dynamics in the Sahel region. In the Great Lakes region, South Africa remains gravely concerned about the humanitarian and the security situation in the Eastern Democratic Republic of Congo, despite peace agreement.
President of South Africa's African National Congress Youth League, Colin Malachi, has criticised the National Convention, which took place almost 2 weeks ago, as a Tea Party of friends. Malachi made the comments at a media briefing at the party's headquarters in Johannesburg today. He claims that President Cyril Ramaphosa was misled in convening the National Convention.
I'm saying if the Youth League is not there, whether it's EFFD, all of these parties, civic organizations that we are knowing them out there, even the foundations that represent integrity were not there. Now, obviously, it was clear that it was a platform created by opportunists to try to present that for the past 30 years, the ANC has done nothing for South Africans. It was a right-winger platform, anti-democracy, set up, programmed by people who are obsessed about taking the progressive out of power.
The Human Rights Watch has accused security forces in Mauritania of serious human rights violations against migrants. In a report, it says rights violations are exacerbated by the European Union and Spain continuing to outsource migration management to Mauritania. The BBC's Guy Hedgeko reports.
Human Rights Watch alleges that between 2020 and early 2025, Mauritania had pursued what it called an abusive migration control playbook, with security forces, military and border control personnel raping, torturing and extorting migrants, as well as using inhumane detention conditions. Mauritania has become an increasingly common departure point for African migrants trying to reach Europe via Spain's Canary Islands by boat.
Germany's cabinet has put forward draft legislation aimed at introducing voluntary military service. The bill could also pave the way to conscription. The BBC's Bethany Bell reports.
The German government said it was aiming to strengthen the army's reserves and active forces. In future, all 18-year-old Germans, both men and women, will be sent an online questionnaire asking if they're willing to volunteer for military service. The government says this will be voluntary for as long as possible. However, if the security situation gets worse or if there are too few volunteers, the government could decide to make military service compulsory with the approval of Parliament.
Recapping the top story this hour, South Africa's National Police Commissioner General Thami Ngubeni says transnational organised crime remains a major threat across the continent. Ngubeni was speaking at the opening of the 27th International Interpol Conference in Cape Town. For any news stories you would like to share with us, please do send an email to newsroom@channelafrica.co.za or call us on +27 11 714 4459. For Channel Africa News, I'm Jolani Tulo Webe.
SABC News. The African Perspective.
In our sports headline, Russian tennis star Daniil Medvedev is expecting a big fine after the US Open outburst. Harambee stars will be pocketing quite a few $1 million despite their CHAN quarterfinal exit. I'll be back with these and other stories at the bottom of the hour.
Connecting Africa to the world. Africa in Business with Thami Ngubeni brings you the latest insights on Africa's economy.
It is exactly 6 minutes after 4 p.m. A very good afternoon to you, Africa. Here's what we've got in store on your business agenda today. Killer moves. That's all you can call them. That's exactly what Sanlam has done with the acquisition of Assupol. They paid a hefty 3.5 billion rand for this property. This now positions Sanlam as one of the largest players in South Africa's mass retail insurance industry. We'll find out what was the strategic intent behind this acquisition. We'll be speaking to the CEO of Sanlam Retail Mass, Bongani Madikiza. Also this afternoon, a look at the latest performances of global and local markets with Lindile Malchas. He is investment strategist at Absa Investments. This and a whole lot more coming up for you on Africa in Business this afternoon. It's gone exactly 7 minutes after 4 p.m.
Africa means business. Tune into Africa in Business with Thami Ngubeni for the future of the African economy. Channel Africa, the African Perspective.
Now, the Southern African Railway Association SARA Rail Conference kicked off in Johannesburg, South Africa on Tuesday. The event has brought together role players in the rail and transport industry to discuss, among other things, railway development, regional integration, as well as investment opportunities within the Southern African transport sector. Sisi Sekhalo has more on this story.
Rail industry players that include railway operators, suppliers, government officials and private sector leaders from Southern Africa have all converged in Johannesburg for the conference. Among the dignitaries were South Africa's Minister of Transport, Barbara Crecy, and deputy ministers from other countries. Crecy expressed that a lot of minerals in sub-Saharan Africa are being moved on roads, and this was having a detrimental effect on the road network. She hailed rail as another big industry.
Well, I think today has been a really interesting discussion. And I think what we can see is that our neighbors are not sleeping, and they themselves are also looking to position themselves as important inland logistics hubs.
South Africa's neighbor Zimbabwe says it is also working on positioning its rail network by working with the private sector, including mines that require rail services. Deputy Minister of Transport and Infrastructure in the country, Joshua Sako, elaborates further on their work.
We are already working on them getting access to the rail. But what we need now to do is look at our legislative framework and make sure that we have the required legislation in place, as well as have a regulatory body in place as well to allow the separation of operators who operate rolling stock and the maintenance of the railway network itself. But we definitely, as a country, are looking forward to opening up our rail as we have done in the past to allow for competition and therefore increased efficiency.
Botswana is another Southern African country represented in the conference. It says it also aims to open its rail to private participants. Keo Achille Atamelang is the Deputy Minister of Transport in Botswana.
Botswana is, geographically, is the center of SADC, or the region. So every train from Zimbabwe to Namibia will pass through Botswana. South Africa all the way to Congo will pass through. So again, it's about strategic positioning so that we don't miss what the opportunities that are trying to grab at. And the same goes to our neighboring countries up north. So yeah, Botswana is the place to be.
The conference ends on Friday. For Channel Africa, I'm Sisi Sekhalo in Johannesburg, South Africa.
Get the news, music, and lifestyle of Africa on Channel Africa, the African Perspective.
Now, the US President Donald Trump's doubling of tariffs on imports from India to as much as 50% take effect today, dealing a rather serious blow to ties between the two countries that became strategic partners after the turn of the century. A punitive 25% tariff imposed due to India's purchases of Russian oil adds to Trump's prior 25% tariff on many imports from the South Asian nation and is expected to hurt growth in the world's fastest growing major economy. This report by Reuters.
Indian exporters are bracing for impact. Steep US tariffs kicked in Wednesday after trade talks collapsed. That leaves India facing levies of up to 50% on its exports to the US, including an extra duty imposed to punish the country for buying Russian oil. Firms like this leather factory in Kanpur, Uttar Pradesh state, know they are on the front line of the trade war. Exporter Shamim Azad says the effect has already been devastating. He says all his orders from the US are now void, with customers telling him to stop work on previous purchases. Azad says some factories that were totally dependent on the US market have come to a complete halt. India had been optimistic that tariffs would be capped at 15%, but officials now say there's no hope of any immediate relief. They say companies hit by the tariffs will get financial assistance and be encouraged to diversify to markets in China and elsewhere. Both sides blamed political misjudgments for the failed talks, but the Russian oil has become a major sticking point too. US Treasury Secretary Scott Bessent and others have accused India of funding Moscow's war against Ukraine by buying its oil. Now, Indian exporter groups estimate that the tariffs could hit nearly 55% of the country's merchandise shipments to the US, benefiting rivals like China, Bangladesh and Vietnam. One engineering industry body predicted exports in its sector could fall by almost a third from September. Analysts at Capital Economics have predicted the trade war could knock almost 1 percentage point off the country's growth this year and next.
That takes us to 13 minutes after 4 p.m. Central African time. That report there by Reuters.
Africa means business. Tune into Africa in Business with Thami Ngubeni for the future of the African economy. Channel Africa, the African perspective.
We stay in the United States as the U.S. Department of Commerce's investigation into the anti-dumping and countervailing duty investigations on certain corrosion-resistant steel products has found that products from 10 countries, namely Canada, Australia, Brazil, Mexico, the Netherlands, Taiwan, Turkey, the United Arab Emirates, Vietnam and South Africa were being dumped in the United States market. The department says in light of these findings, it will enforce U.S. trade laws and it will not tolerate what they call unfairly traded goods in the United States marketplace. For more on this, we joined on the line by Chief Mhango. He's Chief Economist at the Dawn Consultancy Group. A very good afternoon to you, Chief. Good to have you with us. Welcome to Africa in Business.
Good afternoon, Thami, and good afternoon to all your listeners across the continent.
Won't you give us a bit of background to this particular case that have led to the investigation of these countries regarding the steel?
Well, I think it's been more driven by the Trump administration in terms of trying to understand the dynamics with regard to the trade patterns affecting the American economy. So it has been more, I think, motivated by the fact that the U.S. economy is actually facing a negative trade balance when it comes to the steel trade industry per se. So to defeat that purpose in terms of trying to reverse the trend, obviously it's about now, first of all, protecting the domestic market in the U.S. economy, especially when looking at the local producers in the U.S. economy, but also then limiting the entry of the exports into the U.S. market from other countries, such as you have mentioned there. So it's more about rebalancing the trade dynamics and the steel industry in the U.S. economy.
And what do you make of these determinations by the U.S. Department of Commerce? And what exactly is being looked at or analyzed when we look at dumping laws?
Well, the dumping laws in terms of the tariffs, they are all applied in the sense that when you do an investigation and you find out that, for instance, the products that are coming into the country are such a way that the prices of the products in the, let's say, in the U.S. economy, as in this case, the prices are being sold at a cheaper prices compared to the origin country. So to defeat that, obviously, then it becomes what you call anti-dumping, because what that means that it's either there is over supply of those products in the countries where the products are coming from, and then because they're not being sold in those particular countries. So the best option then is to say, here are the products where we cannot even supply to the local market. And then the best way is to take them to a country where these products will be required, but then you sell them at a cheaper price. So that is how you come to that kind of results with regard to the investigation. However, I think coming to the countries which have been mentioned here, I'm a bit concerned on the fact that South Africa is actually a part of those countries which have actually been taken action against, because the steel industry in South Africa is highly suffering. Recently, you have been hearing stories about the ArcelorMittal closing. So it is quite surprising that South Africa is included in the element of the anti-dumping duties by the USA with regard to the steel industry.
And what do you make of that?
Well, I think we have been going through challenges with the US, especially in the issues of the trade dynamics, which have been more or less been politicized, and also in a way have taken a foreign policy dynamics at play. I mean, I think if you observe also a similar pattern which has transpired in the Indian economy, it's all driven by the fact that for instance, much as there can be a motivation regarding trade issues, but one of the key motivations, for example, is because the fact that India is actually getting its imports of oil from the U.S. Russian economy, Russia. So that has then, in the end, derailed the process of engagement on the tariff side for India. So you can see that there's an element of foreign policy issues which is actually now influencing trade dynamics on the global platform.
Now, given South Africa's ongoing tariff responses, as well as industrial policy shifts, for example, ITAC's proposed duties, how should policymakers, do you believe, adapt trade and industrial strategies to safeguard the domestic steel industry? You mentioned the challenges that it's currently facing, with ArcelorMittal as one very recent example.
Well, I think when it comes to the steel industry, obviously there's so many challenges we've been facing there. I mean, some of them have even led to the collapse of the steel master plan, which the government came with in around 2021. So the challenges are quite on the domestic front in terms of dealing with that. So it's got nothing much to do with the trade dynamics which are at play. So I think it's more about the government addressing the dynamics which they promised in terms of the steel master plan, which I think realistically you are looking at issues of local procurement of the steel industry per se in terms of government projects. You are also looking at transportational logistical challenges, for example, addressing the issue of Transnet inefficiencies when it comes to supply of iron ore to the producers, but also in terms of also the cost of doing business when it comes to the steel industry. For instance, the issue of the transport cost, as well as in terms of energy cost, but also the previous years or so, we've also had issues of energy challenges in terms of the steel industry due to issues of load shedding. So I think most of the steel industry issues in the South African context are more domestic matters but international matters.
We focused on what this move is likely to impact and do in the domestic US market, as far as giving greater opportunities to steel producers domestically to be able to compete and resuscitate the domestic market for the United States. But what impact is this likely to have on the 10 countries that we've mentioned, South Africa included? Could these duties perhaps trigger trade diversion, prompting the dumping of steel, quote unquote, into other markets such as Southern Africa?
Well, I think that has already been happening. I mean, be it as it is, I think we understand that China is one of the biggest producers of steel globally. We've seen the emerging trends in terms of most of the cheaper steel penetrating the African market and even the South African market per se. In fact, when you talk about one of the challenges we've been facing on the South African market in terms of steel industry has actually been the issue of dumping of the steel from the Chinese economy into the South African market. So that is nothing new. I think it's been happening. And I think from the element of competitive nature of the steel industry in terms of the international market, I think this trend would require a strong effort in terms of reversing this environment on the African continent. But be it as it may, I think the biggest producer of steel in the African market is actually South Africa. So currently we produce almost close to 4.5 million metric tons of steel. And that steel capacity is now also under challenge because of the long steel products plants of ArcelorMittal are actually under the element of being closed soon, or if government does not intervene in terms of the process of production and also addressing the steel master plan issues. So I think realistically, Africa has already had challenges when it comes to the steel industry dumping from the Chinese economy.
Chief Mhango, we'll leave it at that for this afternoon. Thank you so much for your insight on this particular issue.
Thank you very much.
Thank you. That's Chief Mhango. He is Chief Economist at the Don Consultancy Group. Once again, those 10 countries that have been pointed out by the U.S. Department of Commerce's investigation are Canada, Mexico, the Netherlands, Taiwan, Turkey, Brazil, Australia, the United Arab Emirates, Vietnam and South Africa. Takes us to exactly 22 minutes after 4 p.m. Central African time. In just a moment, we turn our sights onto Zambia.
African enterprise meets global opportunity. Africa in Business on Channel Africa. The KwaZulu-Natal Convention Bureau, in collaboration with Millvest Advisory and the city of Umhlathuze, bring you the 2025 Tourism Investment Forum Africa. As a global platform for local action, the Tourism Investment Africa aims to promote the secondary and tertiary cities and regions as attractive investment and tourism hubs. Be part of the movement transforming tourism in Africa. Join us for the TIFA 2025 from August 27 to 29 at Tembela Venue, Richards Bay, KZN, South Africa. Connecting Africa to the world. Africa in Business with Thami Ngubeni brings you the latest insights on Africa's economy.
It has gone exactly 23 minutes after 4 p.m. Central African time. Now, Zambia and FNB in Zambia, more specifically, has signed a memorandum of understanding with the Zambia Credit Guarantee Scheme, the ZCGS. This is to establish an initiative aimed at enhancing access to finance for micro, small and medium enterprises around the country. Now, the aim of this initiative is not only to strengthen financial inclusion, but also to foster a stronger culture of entrepreneurship, and this particularly among the youth and women-led businesses. For more on this, we joined on the line this afternoon by the CEO of FNB Zambia, Ms. Kapumpe Chola. A very good afternoon to you, ma'am. Welcome to Africa in Business.
Good afternoon to you and good afternoon to all your listeners.
So which specific sectors or perhaps regions are being prioritized under this scheme, and why was it important for you to actually put a scheme of this nature in place?
Okay, so this program really covers all the productive sectors of the economy, so they're all eligible for support. And in terms of regions, it has a countrywide reach. So the initiative actually also places emphasis on youth and women-led businesses, but all the sectors really that can stimulate local production and job creation. So these include areas such as agriculture, tourism, manufacturing, and green energy and sustainability-focused enterprises. Now, for us, it's key to be part of this program because it's something that's been run and led from government through the ZCGS, the Zambia Credit Guarantee Scheme. Because we're a key player in this market, we do know and understand that MSMEs are really a key lever for growth for the economy.
We understand the various focus on youth and women-led businesses, that it's open to all sectors. But apart from this, are there any other eligibility criteria? For example, do they need to have been in business for a certain period of time?
No, so not really, hey. So, I mean, some of the criteria that will apply is really any viable business model that an MSME has. They really must demonstrate that it is viable, it is sustainable, there is potential for growth and for profitability. For those MSMEs that are also looking to grow but have inadequate collateral, the scheme specifically targets businesses that are creditworthy but lack sufficient collateral to secure traditional loans. So it really is quite broad-based from that perspective. We're really looking to support this sector as broadly as possible.
And what type of loans will be offered through this arrangement, and how will FNB share the risk with ZCGS?
Okay, so it really is all types of loans. So it's short-term working capital facility types. It's also term loans. But if just to be a little more specific, so you have working capital loans that intend to support day-to-day operations, such as inventory purchases. You have asset financing loans for acquiring equipment, machinery, vehicles, and anything that may be needed for any equipment that may be needed for business expansion. You have loans for expansion, for scaling up operations, entering new markets, or just increasing production capacity. We'll also do loans in agriculture, so much more for sort of the smallholder farmers and agribusinesses to help them cover the cost of their inputs for irrigation. With climate action now, we're trying to make sure that they're ready for those onsets of drought or any other adverse weather conditions. But also, along the lines of green loans, which I touched on a little bit earlier, those businesses that are investing in renewable energy solutions or energy efficient technologies.
Now, we do understand that money solves a lot of problems, but it certainly doesn't solve all of them. And I wonder what type of aftercare and support systems will be put in place in order to support the MSMEs and gear them for success. What other tools and skills will be added to their toolbox?
Okay. No, so you're quite right. I mean, there will be programs put in place to support the MSMEs, to help them build capacity within their operations. So these will include activities like coaching and working through development partners who offer training in financial literacy and record keeping, business planning and management, marketing of product and customer engagement. There's also the compliance and regulatory awareness that a lot of the MSMEs would struggle with typically, and also helping to create financial linkages, because that is something that we also do quite well at FNB. But I think coupled with this is some of what we call customer value proposition that we have been already put in place as FNB to support the MSMEs. So working even with audit firms, and helping and having them really provide discounted rates to support the MSMEs in preparing the financials and activities like that.
And how are you going to track the usage of the finance as well as the impact that it's actually going to have on these businesses?
So, I mean, we as a bank, obviously, we do have loan programs, products on offer already. So, I mean, similar to how and what we do in providing support to our existing clients and in tracking performance, we would look at loan performance monitoring. We would look at how, the behavior of those products, loan utilization, the business performance of the MSMEs over time. And then looking at those that are they're tracking well in growth, looking and creating opportunities for them to perhaps even finance more activity and finance a bit more of their growth. So we'll be closely monitoring, as we do already in our existing portfolio. Because again, the nature of the program is that these are clients that we would take through a credit vetting process. So then we work with the Zambia Credit Guarantee Scheme to ensure that they provide then that backing of any of these facilities that may go into default, and support the bank through that process.
Ms. Kapumpe Chola, we thank you so much for your time and all the best with the program.
Thank you very much. Thank you for having me.
It's been a pleasure. She's CEO of FNB Zambia and takes us to exactly 4:30 p.m. Central African time as we head over now to the markets desk, where Thabiso Lehoko is standing by with your latest market indicators.
Business news on Channel Africa. The African perspective.
Thanks, Thami, and good afternoon. $1 in South Africa will cost you 17 Rand 62 in Botswana. 13 Pula 32 Namibia, 17 Namibian dollars 62, and in Zambia, the dollar is trading at 23 kwacha 31. In Kenya, the dollar is trading at 128 shilling 461. Ethiopia, 141 birr 98. Uganda, 3,000 shilling 543. Tanzania, 2,000 shilling 511. The US dollar in Nigeria is trading at 1,534 naira. In Egypt, it's at 48 Egyptian pound 539, Tunisia 2 dinar 886, and in Algeria the dollar will cost you 129 dinar 105, while the Moroccan dirham is at 8935 to the dollar. In Angola, the dollar is trading at 912 kwanza, while the Congolese franc is at 2,847 to the dollar. Gold is trading at $3,380 and platinum $1,342 per ounce. Brent crude oil is at $67.43 a barrel. For any business stories you would like to share with us, please send us an email to newsroom@channelafrica.co.za or call us on +2711 714 4459. For Channel Africa Business in Johannesburg, I'm Thabiso Lehoko.
Business news on Channel Africa. The African perspective.
And for the business of sport, here is Figile Lingwati.
Sports on Channel Africa. The African perspective.
Good afternoon, Thami. We begin with tennis news in our business of sport. The behavior of Daniil Medvedev in his first round match of the 2025 US Open against Benjamin Bonzi was not going to go unnoticed. The Russian shouted at the chair umpire his unsportsmanlike gestures and words, and even the aggressive record breaking could cost him a total of $100,000 in fines, a penalty that the tennis authorities are yet to confirm. According to the tennis journalist Ben Rothenberg, Medvedev is likely to receive a fine of $100,000 for unsportsmanlike conduct and a racket abuse, while he could receive an additional $50,000 punishment for criticizing umpire Allensworth, for a total of $150,000 fine. And on to cricket news. The Cricket South Africa CSA has begun budgeting and fundraising for the 2027 Cricket World Cup, with estimates for infrastructure upgrades and stadium lights to be around $17 to $28 million. The tournament is projected to bring an economic boost of approximately $860 million into the South African economy and create over 27,000 jobs. The current CEO of Cricket South Africa, Phuletsi Moseki, elaborates on the windfall for the country.
Many people don't realize the massive economic contributor that sport is, whether it comes to employment opportunities, whether it comes to tourism, whether it comes to being some sort of economic catalyst at those places that are hosting sports. I mean, you should probably see what will be happening in Cape Town. It's quite a lot of money that will be happening. So you can imagine when you speak about such a massive event, and literally the biggest event that the country will be hosting since 2010 World Cup, as the minister has highlighted. And probably the last one that will be hosting, at least in my generation, in my lifetime, So it's a massive event for us as cricket, but even far bigger for the country itself.
The 50-over tournament will be played across the host cities, including Johannesburg, Pretoria, Cape Town, Durban, Gqeberha, Bloemfontein, East London, and Paarl. South Africa is all set to host 44 matches, while the remaining 10 will be played across Namibia and Zimbabwe. CSA is also working on the strategic plan for the tournament, which includes upgrading venues and ensuring proper infrastructure. Museki has more on the importance of the venues.
No. There's a lot of work happening currently. Right. Even my 4 big stadiums are not where they're supposed to be. Yeah. Hence this massive project with the Lions. Yes. So all the stadiums, there's like a lot of work. We've got a dedicated stadium infrastructure team that has been working for the last, 12, 18 months? Yeah. They've actually even gone to Zimbabwe, they've gone to Namibia, like all the stadiums. So there's been a proper stadium audit that was done. Yes. So we know exactly what are all the issues with the different stadium, and there's been a lot of work over the last 12 months or so working on those, whether it's pitches, like you would have seen like those exchangeable pitches, it's part of build up to that. The lights, as I said, the scoreboard. So we know exactly the issues with each and every stadium.
On to football news. Benny McCarthy's Kenya pocketed quite a few millions despite their quarter-final exit at the African Nations Championship CHAN on Friday. McCarthy managed to guide the team out of the so-called group of death, which includes record winners Democratic Republic of Congo and Morocco. While the team have bid farewell to the tournament, they have managed to secure $450,000 for reaching the quarter-final round. CAF had increased the prize money for the competition, with the winner set to take home whopping $3.5 million, while the runners-up will get $1.1 million US. We end with South African Premiership side TS Galaxy are now free to register new players after FIFA officially lifted their transfer ban. The confirmation came this morning from Zurich following months of back and forth between the world governing body and the Mpumalanga-based club. TS Galaxy chairperson Tim Sugazi says they had to pay $13,000 plus a fine of $3,000. Sugazi says although they made the payment, FIFA insisted it be done through the clearinghouse system, leading to delays as they initially paid the club directly. For any sports stories you'd like to share with us, please do send an email to newsroom@channelafrica.co.za or call us on +2711 714 4459. This is Channel Africa Sport. With me, Fikile Lungwati.
Sports on Channel Africa. The African perspective.
We turn our focus now to Botswana, where political parties in that country have reacted differently to the declaration of the state of public health emergency in the landlocked country. President Duma Boko made the announcement yesterday following widespread reports of shortage of medical supplies in public clinics and hospitals. Government has set up a fund worth a little over 6 billion rand and tasked Botswana Development Corporation with the responsibility of securing that amount through local and international investments. Itumeleng Khajane has more.
Botswana faces a dire shortage of medication and medical equipment. Political parties are divided in their reaction to the declaration of state of public health emergency. Dr. Alfred Madikele of Botswana Democratic Party says this is an indication of collapse of health services.
This has compromised our fight against HIV/AIDS. It has compromised our fight against NCDs, as this has been demonstrated by lack of access to proper services. The government has been sitting on this problem since the beginning of this year. We are not talking about like a natural disaster or a pandemic like COVID. We are talking about man-made problems emanating from lack of structure, lack of coordination, and lack of control. Our position is the government would want to suspend laws to do what they want to do. This should have gone through Parliament, like previously when this was done. It had to go through Parliament.
However, Dr. Patrick Mulutsi of the Umbrella for Democratic Change says this is a good move.
The background to this is that we have been running short of medicines for quite a number of months. This is the problem that emanates from the time the UDC government came to power. And fundamentally, we have been short of a number of critical items, including medicines. So the president's step is a fundamental one, very important to alleviate the situation which was deteriorating in our health facilities and hospitals.
Botswana Development Corporation is spearheading the process of securing a little over 6 billion rand to address this challenge, as its managing director, Otenke Abetu, explains.
Is heavily reliant in mineral revenues. Diamonds have not been doing well for quite some time, and the price and obviously the buying activity in that industry has been really slow to non-existent. So this means that Botswana is responsible for, diamond mining is responsible for 80% of exports revenue into Botswana, and it's a big contributor to the government budget. And over time, in the last couple of months, government has not received cash flow from this revenue source.
The first batch of medication has already been distributed to remote areas. The distribution will be carried out by military personnel. Itumele Nkajane, SABC News.
The KwaZulu-Natal Convention Bureau, in collaboration with Milvest Advisory and the city of Mhlathuze, brings you the 2025 Tourism Investment Forum, Africa. By positioning these regions for sustainable growth, TIFA helps drive their economic ambitions while providing access to critical capital, networks, and strategic insights on investments in the trade services sector, such as tourism. Join us for the TIFA 2025 from August 27 to 29 at Tembela Venue, Richards Bay, KZN, South Africa. Be part of the movement transforming tourism and infrastructure in Africa. From markets to innovation. From markets to innovation. Africa in Business with Thami Ngubeni covers it all. With Africa's future in focus, Channel Africa, the African perspective.
It is exactly 4:41 Central African time. This is a big one. Sanlam has finalized its acquisition of Assupol, creating one of the largest players in South Africa's mass retail insurance market. The strategic integration goes beyond the numbers. It represents a stronger, united offering in financial services designed to improve access, inclusion, as well as resilience for millions of households. To discuss this further this afternoon, we have on the line Bongani Matikiza, the CEO of Sanlam Retail Mass. A very good afternoon to you, and dare I say congratulations on this acquisition.
Good afternoon to you, and thank you for having us.
And how did this acquisition come about? Why did Sanlam go out of its way to make sure that it brings Assupol into its fold?
Sisi, we have always believed that it's important to grow at the time of diversity. A lot of people at the time of diversity, they disinvest from the market, they run away. We believed that this is a good time for us to strengthen our presence in the retail mass market. In our view, in the South African market, the only market that is going to grow is the retail mass market. And therefore, being a dominant player in the market that's growing is the right strategic and business decision for us. And it enables us to serve our customers better.
Why Assupol?
Firstly, it was a good business. But you also buy what is available. So it was a good business. It is a business that was available for us to acquire. And we saw some strategic alignments that we could build a much more stronger business. Just to give you a sense, we have now started the integration of the two businesses, and the productivity of our people has improved by circa 20%. And that is going to have an impact on not only our bottom line, obviously, but also how our customers are serviced and how we can be able to offer our customers a better offering from both the two very strong brands. But obviously, these things only work if we work tirelessly at integrating the businesses, at making sure that the businesses deliver value for the shareholders, for the staff, and for the customers. And that's the journey that we're in.
And perhaps let's delve deeper into that. I mean, you're speaking about integration. How does that strengthen your ability as Sanlam to serve the mass retail insurance market and position you as a leader in inclusive financial planning? What is going to be different between Sanlam pre-Assupol and Sanlam post-Assupol?
Well, let me just mention 3, maybe 4 things. The first one is the number of advisors on the ground. We've literally doubled our advisors from 3,000 to 6,000. So we've got 6,000 people out there who can service the customers. The second thing is that we had a target of 200 branches as Sanlam by the end of 2026. We will now be able to achieve that because Assupol brings with it 80 branches. So you can see that synergy helps us to be able to do that. The third issue is around how we service customers. We've been very clear that this must be not only value accretive, but it must also help customers get better value. So we're now busy with how are we going to get the service metrics up, and we're working together as a team to do that. And we have already seen some improvements. In fact, in the servicing space, we've seen an improvement of about 21% in the speed of settling claims. What we now need to do is to work harder at reducing the time it takes for us to settle a claim, so that customers do not feel the pain of our processes. And the last thing is, we've been very lucky. When you acquire a business and you have a business that is working, and you acquire another business that's working, it has a way of dealing with the biggest challenge we have in our country right now in the claims environment has been fraud. And Assupol brings with it very good qualities of how they combat fraud as they process claims. Those are the four things that I can talk about. I think it's important for me to add that we've been very clear that we are going to work hard at making sure that we would conclude this integration without retrenching any people. We want our people to be flexible at doing other things within the organization, but we've made that commitment to the people themselves, and we're making that commitment publicly because we believe that this should be value accretive for all the stakeholders, including our staff.
Now, Assupol is also listed on the Johannesburg Stock Exchange. What has been the market reaction thus far to this acquisition?
Assupol was listed in the Cape Town Stock Exchange. We have since delisted it and effectively owning it 100% as the Sanlam Group. The market has been very positive. I think if you think about the retail mass market. If you think of the retail mass market, you have to think about it in two ways. One, you have to think about it from a ShopRite perspective. You have to think about it from a Capitec perspective. You now have to think about it from a Sanlam perspective, because those are the three big players in the retail mass space. And I think that's what we were trying to achieve as the Sanlam Group, and therefore to become a dominant player in the retail mass space, in the financial services space.
And how does top management change? How are you going to divvy up the C-suites, those corner offices?
We have done a process. We've gone through a process of how we assess the leaders who are in the business, and we've gone through that, and we've gone to all the approvals. We're just now waiting for the approvals from the regulators to do that.
And what role do you see Sanlam, I guess, playing in advancing financial literacy, especially among youth and emerging markets? Because financial literacy is very key to the health of the industry.
Being big, having scale comes with responsibility, and that responsibility is to work hard at getting to more people. So we're targeting to have 7 million people educated next year, financial education next year. We're targeting another 6 million the following year. So I think that responsibility we take seriously.
Well, we wish you all the best, Mr. Let me see here. Matikiza. There you go, Mr. Matikiza. Thank you very much, sir. And congratulations on this acquisition.
Thank you.
Huge acquisition there with Assupol. They got it for 6.5 billion rands market. It is exactly 10 minutes to 5 p.m. Central African time.
Get Channel Africa on DSTV Audio Bouquet. Channel 802. AUSISA, the Association of Water and Sanitation Institution of South Africa, is a platform uniting Africa's water professionals. This November, Africa leads the conversation on water and sanitation. Join global and African leaders at the AUSISA Africa and Global South Dialogue 2025 from the 9th till the 12th of November at the Emperor's Palace, Johannesburg. From policy innovation, this is where action meets collaboration for a water-secure future. Register today at ausisa-watersan-dialogue.org or follow at AUSISA on social media. AUSISA, working together for sustainable water and sanitation security in Africa. Connecting Africa to the world. Africa in Business with Thami Ngubeni brings you the latest insights on Africa's economy.
Now, for a look at the latest business and financial market developments, we're joined this afternoon by Lindile Malgas, investment strategist at Absa Investments. Good to have you with us once again, Lindile.
Good afternoon, Thami, and pleasure to be back. And good afternoon to the listeners as well.
So perhaps let's kick off with unpacking the latest performance of global and local markets. What is the lay of the land today?
Yes, so performance is fairly mixed today. So we are seeing higher movements within the Japanese Nikkei and the Euro Stoxx 50 index. And then we are seeing some disappointments within Chinese shares, those trading lower. And the UK's FTSE 100, that also posting losses. Then look at our local markets, the all shares down about 0.4% today. And we are seeing those declines being driven by resources and industrials, whilst we are seeing a slight rebound of about 0.1% in financials. And then our local currency looking a bit weaker today, so trading around 17 Rand 76. And also seeing a bit of weakness within commodity prices as well, with the exception of oil, which is trading close to 1% higher today.
And taking a look at Old Mutual, they released a trading statement for the first half of the year, ended 30th of January 2026, and they're expecting a decline in earnings per share. What were the key factors driving this?
Yes, so we did see the company expecting a double-digit decline within earnings per share, a similar decline within headline earnings per share. They are seeing it on the back of performance within Old Mutual Insure, and then also seeing it from adverse mortality experience and loan impairments, and then also reporting from the headline earnings per share side, the decline being from a 2.2 billion reduction within the Zimbabwean profits, and that is following a change within currencies from Zimbabwe to the US dollar. And then we did see, despite the negative news, the share price performing quite positively. So there were some positives, and that mainly coming from the company announcing that the adjusted headline earnings per share are expected to increase by about 20 to 40%. And we are also seeing the share trade about 11% higher year to date.
And we're seeing Cashbuild also issuing a trading update for the year ended June 2025. What were the key takeaways from their update?
Yeah, so I think Cashbuild has been a business that has been operating in a very, I would say, tricky operating environment. Coming from the COVID-19 pandemic and the recovery from that, we did see a lot of discretionary spend on some of the home items and home improvements. But due to a more tougher macroeconomic environment, the company has seen a bit of declines from a earnings and revenue point of view, but we are starting to see an improvement within financial performance. So latest results or trading statement pointing to a more than 100% increase in earnings per share, and then headline earnings per share, which is the most used measure in South Africa, that expected to grow about 7 to 12%. And management is saying that this performance is on the back of improved operational efficiency as well as improved profitability across the business. We did see markets having a more muted reaction to the results. I think it's also in anticipation of a uncertain macroeconomic environment. And year to date, it continues to be under pressure, so trading in excess of 20% lower.
So what are the economic releases, Lindile, that the markets are expecting this week?
Yeah, so major one this week will be the US second quarter GDP estimate, We saw in the first initial estimates that coming in quite strong and rebounding from the contraction that we saw in the first quarter. And then what will also be key from a monetary point of view will be the core PCE price index. This is the US Fed's more preferred measure of inflation. So if you can see that coming in a bit lower than what markets had anticipated and what the Fed has also anticipated, that may boost the interest rate cut expectations from markets as well. And then from a South African perspective, tomorrow expecting the release of producer price inflation, which is quite important from an input cost perspective for some of the producers as well.
Lindile Malchas, we'll leave it at that for this afternoon. Give yourself a splendid evening further.
Thanks, Thami. Same to you.
That's Lindile Malchas, investment strategist at APSA Investments. He brings us to exactly 4:56 Central African time as we bow out for this Wednesday edition of Africa in Business. Just a really quick recap, some really interesting stories that we covered for you, including the U.S. steel dumping case, the U.S. Department of Commerce having released its results on the investigation on 10 countries that they've accused of dumping steel. This is corrosion-resistant steel products into their markets. Also, a conversation with the CEO of FNB in Zambia on the recent MOU with the Zambia Credit Guarantee Scheme. Joël standing by for Vue d'Afrique. Bonjour Joël.
Bonjour Thami, bonjour à tous les auditeurs de Channel Africa. Alors sur Vue d'Afrique, tout à l'heure, il sera question du président sénégalais Bassirou Diomaye Faye qui est reçu ce mercredi à l'Élysée en France. Nous parlerons également de la présidentielle d'octobre en Côte d'Ivoire, mais aussi de l'ouverture ce mercredi à Moroni de la 3e édition du Salon des entreprises BIK 2025. Merci de rester connectés. Merci, Thami.
Merci beaucoup. That's how we as Africa in Business bid you farewell for this afternoon from our splendid team, our producer Mabu Buloka, technical producer Tato Maparoma, social media talent Butelezi, news desk Jwalane Tulongwepe, economics desk Tabiso Lehoko, and the sporting desk with Figile Lingwati. I'm Thami Ngubeni. This has been your Wednesday edition of Africa in Business on Channel Africa. Have a splendid evening further.